Imagine a hidden rhythm beneath the chaos of financial markets. 9 fundamental waves of energy and behavior that govern every major trend shift. These waves, rooted in complex systems theory, nonlinear dynamics, and fractal mathematics, mirror the cycles found in physics, biology, and even cosmology. Just as ocean tides are driven by gravitational harmonics, market tides are shaped by these 9 synchronized oscillations, each unlocking a different scale of human decision-making, from microsecond algorithmic trades to generational investment psychology. When 2 or more waves converge, they create the precise inflection points where bull markets end, bear markets reverse, and entirely new financial eras emerge. This is not speculation. It is the uncontested architecture of market evolution, a framework where 9 waves define every turning point, past, present, and future.
Welcome friends and traders. Today we are going to demonstrate the 9th wave phenomena. We have level 1 price bands. We have level 3 rotational oscillator, which is designed for pullback into larger ecosystem for longer term trends. And then we have the prophetic oscillator as well, which is used for counting the 9th wave endpoint, giving us the level of confidence to put on the biased trades, and they can be hedged as well. So to start off, this is a chart of Oracle on a weekly basis. So if you need to find out the endpoints of a system which is moving in a specific vector space, what we need to do is have an anchor point. Where do we anchor our count from? And what constitutes a valid wave is the second question. If you have a system which is describing the wave phenomena, wave and particles, remember Heisenberg principle. Once we have this phenomena detecting system, how do we know what we're looking at is a valid structural descriptor of a given wave? So in this system, the prophetic oscillator, the wave must reach above and below these center points to be a valid wave. You can also start the counting where the rotational oscillator has given us the bias to go long. So you can start from that anchor. And then we're going to count these waves from that anchor. So let's count the red waves. 1, 2, 3, 4, 5, 6, 7, 8, all right, and 9. So here we are, that we are suggesting that after the 9th wave, market is going to make the move it needs to make to continue this 9 segmented waves, 9, 9, 9, 9, 9. Now this is a very beginner friendly 9th. Now you can do this for the price as well, but you can find price endpoints, but we are looking at where the energy is right and ripe for us to take positions. Now if you look at this trend, the trend is up. Why it is up? Because, well, we have two moving averages. The red 250, and this is a pretty much a very basic 101 of investing in the market. At this point, we have identified the rise of the wave, and we can go bullish. And in 1 year, your investment doubled. You can look at the price. And let's say you invested 20% in your hedging, you got 80% return on investment. That's a tactical move you need to make. If you don't know how to make those moves, 369forecast@gmail.com can have private sessions. Let's continue and count the next wave. So this is the first wave we counted, right? 9 waves. We do everything with 369 as structures have been set up by the universe itself in such a way. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 9th wave endpoint right here. Well, it's a little bit to the right side. You got the idea. And what are we positioning? We are getting out of this wave and we're taking the bias in the other direction. And we can hedge ourselves always. And what happens next? You double your money again next year. With 20% going towards your hedges, you got 80% return on investment. Friends and traders. So this is our rotational oscillator entry point. Now this is converging with this wave endpoint. Isn't it fascinating? And then the tops, which we try to describe, tops, this oscillator, which is the rotational oscillator, is not designed to pick the tops. It is designed to pick the bottoms. For a reason, because we have positional hedge fund, rotational hedge fund, mindset traders. So we're gonna take those positions and hedge them, and we find those rotational opportunities. When the panic hits, we are buying. When the blood is on the street, we are healing. So my friends, that's the game. So if we understand the game, you can play the rotational metrics. So now you may have a model which picks the tops efficiently. Tops are a little difficult to pick because remember, market is, because of the risk-free rate model, is drifting. For hundreds of years, if everything is drifting, inflation, GDP, your dividends, add it all together, 10% is drifting and drifting. Average 8-10% is keeps on drifting. That's why you invest in your 401ks in 35 years of extended physical, mental labor. You get 10% drift profits. Keep on adding to the drift. But we are talking about something different. We're talking about rotational market, and we're trying to be building large assets over time for free by doing this rotational metrics. All right, so but this is the approach we want to take. So that is what this oscillator, we have discussed it, is designed to do. And now we have, when the bottom punches in, right here it punched and punched, right? So it punched here, it also punched here. This was much more effective. Now what is going on? We are overlaying the 9th wave on the rotational oscillator. All right, so I hope this makes sense. We also remember now there 8 is a hidden 9. Remember that. Remember we always talk about 8 is a hidden 9. So sometimes if the momentum, as Gans said, there could be a loss of momentum, which means we might skip a heartbeat, which means we may be rotating on the 8th wave, not the 9th. Still 9 is going to give you the winning streak you desire. All right, so let's count it again. 1, 2, 3. We're starting from this wave where this ended. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now this did not go all the way down, so okay, this is the 9th wave again, and the kiss is here. We call it rotational oscillator right here. You see these endpoints, my friends and traders. You got to understand the dynamics of the market through volume, squaring the volume, rotational markets, wave markets. There's so many approaches. If you do the right fundamental mathematical approach to markets, all the models work. That's why we have so many, they all work. In fact, there is a web page you can go and check, www.369forecast.com, and then you can go to the video series on the left side, and then you can go to level 1. You can see that one day, on a single day, we analyzed the single day of the crash with 20 tools, proving if the fundamental structures are strong and valid, you have a potential of phenomenal success with time. You can definitely call your brokers, your financial advisors, and you can be the analyst of your own things if you don't know how to put on the trades. They can help you. All you have to say, hey, my analysis shows the market is going to rotate up. Buy me XYZ. They'll do it for you for $5. Shares are free now. You want to hedge it, they can also hedge it. They will not tell you what to do, but once you know what you need to do, they will help you put the structure based on your risk profile. There it is. You can ask them, I want to hedge it, this is the risk I want to take, and this is the time frame I want to hold. And there it is, my friends. We are looking at a tactical move of the cosmic models applied in financial arena. All right, so let's do one last one. We ended here. Let's go. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so what do we get? First of all, we need to exit from this wave, right? Okay, so what did we get out of it? Again, same thing, double the money, double. All right, so million, 2 million, you're already 4 million up right now if you have that portfolio size. Hedging is important. Without hedging, you have issues. All right, so 1, 2, 3, 4, 5, 6, 7, 8, and this is 9. And let's see where 9 is pointing to, which is right on the top. Did I count it properly? 1, 2, 3, 4, 5, 6, 7, 8. This is the 8th wave on the top, and 9th is on the bottom. So if you look at the rotational oscillator, we said when they are separated out, top is coming, but it's very, as you can see, this is not easy to find those tops. You can keep on drifting. Same thing here. The bottom is drifting and drifting and drifting, so it becomes difficult to pick the tops. But this is not designed for it, so use it what things are designed to do. For folks who are in the program, make sure you understand and follow the rules. All right, so here is the end of this wave right here. Again, it gives you whatever profit you can get out of it based on your trading style, but where the waves are going to be impacting the market and making the next leg up or down. All right, my friends, what next? With time, as you spend and interface with these 9 waves, remember the most prominent number we have been talking about is 89. 9 numbers, 8 jumps is 89, 8 and 9. You can just see how they operate. With time and maturity, we can help you understand these phenomena. Okay. Let's look at the second part of the equation. So at times what we have to do is look at, now if market is going sideways, it did sideways for almost 1 year, 10 months, 9 months, right? Up and down, up and down. Made all-time high, and then it is just rotating, looking for the next impulse to start. So and remember, we love to be using the anchors which are close to the this 200 moving average or some rotational values. We can also look at the anchors which have some technical analysis behind it. For example, the break of a sideways zone is the anchor. We can start the anchor from there, or it is a retest failure, or it is a big bar. Remember, the fundamentals do not change. If market is doing this chaotic scenario, it is not where we think it should be at. So if you look at the rotational oscillator, right, so where can we put the anchor? Where can we start the wave counting? One thing can be just do this progressively where it ends. So let me do that. We add it here. This is the top. Now we're skipping a heartbeat. Okay. So if we start from here, so there are 2 tops. Which one to use? This top or this top? So that becomes a little bit of a challenge. So now we are looking at which top is confirmed. Now this is where you can use the rotational oscillator. Remember, if it is a maximum separation, that's the top which is a prominent technical top. You can also use C54 and see there, that is a price level, will be same place. So this one, top versus this top, you can just see there's a divergence in these 2 scenarios. So which is a stronger top is this. And this is where you cannot do this across 30,000 stocks, right? You can just do it on your instruments, commodities, or anything you like. You can just pick 20 of them, 10 of them, and just track it. Rest of your life you'll be busy just doing this. And then there's a wave inside the wave, which is right here. So this one is a technical right approach to start the counting from. And let's count from there. Let's see where we end up. 1 2 3 4. Sorry, we're starting from here. 1 2 3 4 5 6 7 8 and 9. Okay, so I'm looking at this to be the next vertical, let's go vertical, as a turning point in the market for the next wave. Where the next impulse will start from. Now this is where now you need to understand, I think you guys do, since you guys are now master of 369, you can do this sideways actions. You can create these blocks of sideways actions, right? Do some technical analysis. You can go to 6 months chart, 1 year chart, as I showed you in the previous video. We can see if the things are choppy in one time frame, go to higher, go to 3 months chart. This is a weekly chart. Go to monthly chart, go to 3 months chart, go to 6 months chart, go to 12 months chart, where 1 bar is 1 year. Remember, clarity is your birthright. Just have to claim it. Alright, so we come down to this level. Now what has happened here? Sideways action, breakout, living there. We know exactly market is going to blow up now. This is pure technical analysis. This is also buying bar, which is held here at the top edges of the sideways action. So if you want to take the momentum up, we go from there. So okay, so what happened here? Well, this whole phenomena where the wave ended for us earlier was sideways. Okay, tough luck on one stock, no worries. This is Oracle. They had some challenges with the cloud space during this time frame. And then they bought TikTok and all these things, and the world has established, reset itself, and they are trying to rally behind tech companies again. All right, my friends and traders, what do we do next, right? So this is where we got the momentum on the 9th wave. Now, as I said, anchoring points are important. You don't need to stitch the 9 waves together all the time, because sometimes it will be broken. Understand? All right, so how do we know? This is where we are putting these together as a phenomena. Right here, anchor point. Where's my next anchor point? Is right here, is also anchor point. Why? Because the rotational oscillator told us to be bullish here itself, but the wave ended here, as we just saw, right? Because these two things are different, but we can get smart about it. You, I think, understand the point. So let me remove all this and we close this structural discussion on this. Now we have been using the faster wave detector. You can also use the slower wave detector. Okay, so when we do the slower wave detector, rules are a little different, because what we do, we just look at the oscillations. There are 3 things we can do. One thing I just described, I think, profoundly, I hope. Second thing is the wave detector, and we need to starting point using this rotational oscillator. Got it? So how do we do this? Simple. Just see the peaks and valleys. Starting from here, because of the kiss. 1, 2, 3, 4, 5, 6, 7, 8, 9. And it turned. So this is where we have to talk about some other encapsulation techniques a little later, and this is where the top was made. You will only know after a week or two, because market has to close, make some higher high or lower low. That the trough and the peak has to be qualified. It will not happen same day, right? It will go to the next week. So it takes two to put the curve. So you'll be, this is the top. So anchoring is kind of very important, because if you don't anchor properly, the counts will not work. And this is again our weekly chart. I'm showing you this on a weekly chart. From here you got this impulse. We counted using bigger waves. So you are the lucky one to be able to do this. Alright, so let's do it through the faster one. We broke it from here, right? It came back to test it here. So this is where we ended. We can count from there. Get some ideas. 1, 2, 3, 4, 5. Where did we start from? Yeah, 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, which came at the secondary top. Alright, friends and traders, moment has arrived for us to depart and give you some insights into how strong these GAN and Tesla tools are if done properly, and how we can entertain the ideas of success using these prophetic oscillators.